Hello and welcome to Damien's Midweek Markets, the show where I talk about what is driving investment markets and what to look out for in the days and weeks ahead. Now, if you recall, last week we had an oil price shock, which was the big story, and everybody was wondering how that would impact markets. Now, since then, the oil price has started to recede. The price has dropped. We've gone back towards the $60 a barrel on Brent crude. So that is something that is now, it seems to be yesterday's news, although oil output from Saudi Arabia is still affected. What's happened this week, it's almost like Donald Trump got bored of the fact that he wasn't in the news, that now he's decided he's going to shake up everything. Now, the big story in the news this week is, of course, the impeachment proceedings that could happen against Donald Trump. So Donald Trump has been accused of using his position to try and discredit a potential opposition opponent for next year's election during a phone conversation with the Ukrainian president. So that has led to the Democrats to try and launch an impeachment inquiry. That's quite big news, and as a result, the stock market took a bit of a wobble. Now, what's happened in previous impeachments? There's not been that many of them, but I will talk about it more with 80/20 investor members this week in the newsletter. But just to say, you can expect more volatility if history does repeat itself. So Donald Trump is in the news. He's of course denied things. He's released some form of transcript to try and discredit the impeachment inquiry or the calls for one. And so what we've had is the market now poised and ready to sell off or slightly panic, very nervous about what could happen in the coming days. Of course, we've also had trade war headlines. We had Donald Trump go to the UN and start to rant about China. He'd been talking about their IP theft, about them being currency manipulators. So the market took that as a bad sign for potential US-China trade war negotiations. And of course, China pulled out of some negotiations. They had a trip to the US, which they actually cancelled. So the trade war angst has increased. Now, if you look at the price of copper, something I've talked about in previous episodes, as a bit of an indicator of what the market or what the likelihood is that the market places on a truce in the trade war, then the copper price has been steadily falling despite the stock market every now and then getting quite excited about a bit of prospects or any news on a potential truce. So while the stock market might leap on some soundbite from Trump saying a deal is close, the price of copper has been steady falling. And actually, copper has been shown to be probably the more accurate predictor of the likelihood of a trade war truce, because it still is very skeptical. It will see how that will pan out in the coming days and weeks. So the market at the moment is listening to what's going on in US politics a lot. It's very, very nervous. Now, in the UK, we've had a similar thing go on around Brexit. So if you remember the news, we've seen that what's happened in Westminster is that it was deemed illegal for Boris Johnson to close Parliament in his way of trying to force through a no-deal Brexit. And that has caused the pound to fall. You might think, why would that happen? Wouldn't the pound rally? Because would it not mean that Boris Johnson is not going to get his own way? But actually, the market is interpreting this as a bad sign, a very nervous sign in terms of the UK government being able to do anything. So the pound has tumbled from $1.25, so $1.25 that is, down to $1.23. So you would have had a boost to your portfolio on any overseas holdings that you've had. In fact, bonds have rallied in the last week as well. So if you remember, we had that rotation where things that did well in August, so that was the defensive, that was REITs, that was bonds, and that was consumer staples, started off quite badly in September because everybody started to paint a very much more rosy picture about the global economy. We've seen that rotation start to unwind slightly, so we're still seeing the defensive now come back. They're starting to outperform. We're actually seeing in America that consumer staples are reaching new highs, so are utilities. And what you would like to see if you want the bull market to really extend its run is some other sectors to start to set new all-time highs as well. We've not quite hit that. We've been getting near all-time highs on an index level and we've been pulling back. So that's something to watch out for, because it could be, some technical analysts are saying, we could be starting to see new lower highs. Of course, if we get lower highs, that starts to suggest the market could unwind. Now, that's something to keep an eye on in the next couple of weeks. Back in the UK, the constant Brexit headlines are causing spikes of volatility in currency markets and also in equity markets. But what you're also seeing is gilts have suddenly picked up again. So those are the loans from the government that you can invest in, gilts. They started off September badly, but they've actually started to come back again and started to do quite well in the recent week. We've got to see if that pattern continues. So where we are now, politics is having a big influence. Investors are following headlines, overlooking the fundamentals underneath, but every now and then those fundamentals, those poor economic data that came out of Germany this week, start to cause people to panic again, which is why you're seeing the price of copper fall. As we move into October, it will be interesting because October has a habit of actually being a poor month for investors. If you go back to 2018, you might remember that the stock market collapsed after the first few days of October. So we saw a new high in September 2018, then we got to October and things collapsed. Of course, Brexit is still meant to be on the cards at the end of October. We will see if that happens. The other thing to bear in mind is that we're coming to the end of a quarter, and that tends to see a spike in volatility as well as traders start to unwind positions or take new ones, basically booking in profits or trying to not crystallize losses as we head in towards the end of the year. They're very conscious of where their portfolios will be at the year end when they report. And of course, the other thing to bear in mind is we're getting near earnings season. So we're going to have a new earnings season start in the coming weeks. That's where companies start to report their profits. And this earnings season will be important to see what's happening with company earnings generally. Are they starting to recover, or are we still seeing a poor outlook? Are we seeing earnings fall? So that is it for this week on Damien's Midweek Markets. Don't forget you can contact me via damien@moneytothemasses.com or via Twitter, money to the masses with the number 2, and of course subscribe to our YouTube channel.